In this video, I've got a store of value showdown for you guys. Bitcoin versus gold versus stocks versus bonds. Which one's gonna come out on top? Please remember, I'm not a registered financial advisor. This is not financial advice. This is just me bringing you my opinion on what's the best store of value for the next decade. What's up, guys? Welcome to Walking Crypto. My name is Taylor. I walk and talk crypto. I'm here in Watkins Glen State Park, enjoying the beautiful cavernous scenery. You might be wondering, why do I spend so much time talking about the philosophy of Bitcoin? Why not just talk about the price? The reason for that is because the cryptocurrency market is very volatile. We recently experienced over a 50% correction in the price of Bitcoin, from its local top of 64,000 down to its local bottom of 29,000. If you invest in Bitcoin simply because someone told you the price is going to go up, you don't have the conviction to hold it when the price dips. For this reason, it's important to develop a thesis as to why Bitcoin has value and why you're choosing to hold it for the next 10 years. Without this, you'll simply be at the whims of your emotions. When the price crashes, you will sell. When the price goes up, you'll buy back in and continue to repeat this until you lose all of your Bitcoin. It's so important to have an investment thesis because the reason you invest in something equals the conviction with which you will hold it during economic downturns and negative news narratives. Because I have an investment thesis and such strong conviction in the future of Bitcoin that I held all the way. I bought more, and in 10 years, I'll be so much wealthier because of it. Store of value showdown. Bitcoin versus gold versus stocks versus bonds. Wealthy people use assets to store their wealth and grow it over time. What are the characteristics of those assets that make them ideal stores of value? Let's look at the two most important aspects. Scarcity. Dollars are a poor store of value because governments can print them, making the total supply inflate over time. The more predictably scarce the asset, the better. Therefore, we need to put our dollars in a finite asset to store their purchasing power over time. Return on investment. How will an asset not only preserve, but increase wealth over time? Bitcoin has a predictably scarce and fixed supply. There will only ever be 21 million Bitcoins. Due to the halving events, we know that every 10 minutes, 6.25 Bitcoins are produced. In 2024, newly mined Bitcoins will drop to 3.125 every 10 minutes, and that will continue until all 21 million have been mined. Gold supply increases approximately 2% every year. However, this 2% increase is variable. As the price of gold increases, miners can choose to increase their output by opening more mines, hiring more workers. There has never been a single audit of the supply in gold in banks and institutions. We simply have to take them at their word that they have as much gold as they say they do. Looking out 100 years into the future, when we inevitably become an interplanetary species, companies will be able to mine gold from asteroids and nearby planets. Simply mining 16 Psyche, an asteroid between Mars and Jupiter, would increase the global precious metals market by $700 quintillion. Because a store of value needs to work for the next 100 years, we have to take these things into consideration. Stocks have an even worse scarcity problem than gold because their supply can be altered at the whim of corporations led by humans. issuing new shares or buying back shares can be enacted by a board of directors. Only Bitcoin has a transparent, programmatic issuance rate with a hard cap ensured by decentralized governance and mathematics. 2. Return on investment is important because if the dollar-denominated value of an asset merely stays constant, its purchasing power will decrease over time. Bonds are often touted as being the lowest risk ROI. However, given that inflation typically runs 2 to 3% per year, and a 30-year U.S. Treasury returns 2.05% per year, the longest maturity bond barely keeps pace with inflation, and anything less than 20 years yields negative real returns. That means by holding a bond, you actually lose purchasing power over time. To me, locking up my cash in a negative yielding asset is the riskiest investment decision of all. Some stocks may have quite good returns, but because they are based on free cash flows measured in a depreciating currency, there are too many moving parts to make them a reliable store of value. I think of investing in stocks as being a part owner in an exciting business that I think will grow in the future. This is the true purpose of stock ownership. Gold has proven to be a good investment over the last 5,000 years, but due to its unverified and uncertain supply versus Bitcoin's provably scarce supply, it has ceased to be the optimal store of value for the next 5,000 years. The exponential growth rate of Bitcoin users plus massive inflows of individual and institutional investment, the returns of Bitcoin will outpace gold's in the coming decades.
So now that we've discussed why Bitcoin is the dominant store of value for the next decade, we have to understand, how do we value it? What price do we think it's going to go to? You may consider yourself a great stock picker. Therefore, if you think you can achieve 50% returns over the next 5 years with a given stock, then you have to have a reason to hold Bitcoin because you think that it will achieve better returns or will be more secure in the long run. So I'm going to take a look at the market caps of gold, bonds, real estate, and stocks and determine what percentage of those market caps I think Bitcoin will overtake. Gold has an $11 trillion market cap. And given that to me, Bitcoin is a superior store of value, I believe Bitcoin will completely demonetize the entire financial gold network. Gold is used for industrial and aesthetic purposes, so Bitcoin cannot consume the entire $11 trillion market cap. It's estimated that the store of value market cap of gold is 90% of that $11 trillion, or approximately $10 trillion. Therefore, I believe that Bitcoin will consume 90% or $10 trillion of the gold's market cap by 2030. The total global bond market cap is $120 trillion. Certain hedge funds have written in their prospectuses that they must buy a certain amount of bonds, even though currently, due to inflation, they're yielding negative real rates. For this reason, Bitcoin cannot even come close to consuming the whole market cap of bonds. However, I believe that sovereign nation states around the world will start to divest out of US bonds and into Bitcoin. Therefore, it will consume 10% of the $120 trillion market cap of bonds, adding to the 2030 Bitcoin market cap $12 trillion. There are large numbers of retail stock investors who love the future of their favorite companies. Therefore, 98% of this global stock market cap will retain its value. However, Bitcoin will inevitably start to eat into those zombie companies and overpriced stocks with no earnings. 2% of the $100 trillion global stock market cap is $2 trillion. Lastly, 1% of the $200 trillion global real estate market cap is $2 trillion. Woo! If you add up all that value that Bitcoin will consume from gold, bonds, stocks, and real estate, By 2030, that equals a $26 trillion market cap, putting the price of Bitcoin at $1.3 million. If my investment thesis comes true, that means any capital invested now will have a 37x on your money. I'm out here enjoying a beautiful day, and if you get value out of these videos, please subscribe to the channel. I'll bring you Bitcoin, cryptocurrency, and investing content every week. Thank you so much. Have a great day.